Fiat money, or money that is not backed by a physical commodity, has the potential to lead to inflation if not managed properly by a country's central bank. Inflation can lead to a decline in the purchasing power of money and can contribute to economic inequality. However, whether or not it will impoverish the world also depends on a variety of factors such as a country's economic policies and its ability to effectively manage its currency. If money were backed by gold, it would likely lead to a more stable currency, as the value of the currency would be directly tied to the value of the gold it is backed by. This could potentially reduce the likelihood of inflation and the decline in purchasing power that comes with it. However, it is important to note that the distribution of wealth would still be influenced by a variety of factors such as economic policies and government spending. Additionally, there may be issues with the practicality of backing money with gold, such as the cost and logistics of storing and transporting large amounts of gold. Here are 10 examples of how money backed by gold would help to distribute wealth. 1. With a gold standard, the value of money would be directly tied to the value of gold, which would reduce inflation and increase purchasing power for people. 2. A gold standard would limit the ability of governments to create money out of thin air and would limit their ability to engage in inflationary monetary policies that would lead to wealth redistribution. 3. By limiting the money supply, a gold standard would increase the value of money and reduce the level of debt. 4. A gold standard would provide a stable currency and would encourage savings, leading to more capital formation and economic growth. 5. A gold standard would prevent the government from manipulating interest rates, which would reduce the ability of the government to redistribute wealth. 6. A gold standard would encourage international trade and investment, leading to economic growth and wealth distribution. 7. A gold standard would reduce the power of central banks and increase competition among banks, leading to more efficient financial markets. 8. A gold standard would increase the transparency of monetary policy and would reduce the ability of governments to engage in hidden inflationary policies. 9. A gold standard would reduce the ability of governments to engage in currency manipulation and would reduce the potential for currency wars. 10. A gold standard would increase the stability of the economy, leading to more predictability and encouraging investment, which would ultimately help to distribute wealth more evenly. It is worth noting that these are just potential effects and the actual outcome can vary greatly depending on how the gold standard is implemented and other economic factors. www.MuslimFin.com